Welcome to the B.F. Anderson Techno Fundamental Report for September 26th. Well, the Fed cut rates. This is the first time in over 2 years. You know, it's not the news that you should pay attention to. You should pay attention to how do the markets react to the news. So the cutting of interest rates has had an interesting change of character in the market that I'm noticing. What we look for in our technical work is we look for breakouts. So you have a base, and then you have a breakout. More than likely, will be some profit taking in there, but then it starts to trend up. So what we're starting to notice here, and you have to realize that growth stocks, and especially the smaller companies, the mid caps, the small caps, have been underperforming the large caps for over 2 years, almost 3 years in fact. So what's been happening is, for the last 2 years, is that we would see these breakouts and then they would fail. We would get a breakout and fail. And right around the time the Fed cut interest rates, I noticed one of the stocks in my watch list called AppLevin. They're a software company. You can see its base, very nice base. It broke out. And I said to myself, I should buy this stock. But I didn't because I'm so concerned about all these breakout failures. But guess what? Then it didn't break out and it's starting to trend up. So this is a change. This is a change of character. Now, when you're managing a portfolio, you got to pay attention to position sizing. So what we do is we'll start out with what we call a test buy or a pilot buy. And we'll use a small percentage. Usually it's anywhere between 2.5% to 5% of the portfolio. Now, we do use stop loss orders. Generally speaking, I will not let any one position deteriorate by more than 6%. So just run the math. So if you have a 5% pilot buy and it fails, you then go down 6% during the failure. 6% of 5% of your portfolio is 0.3%. So you then have 99.7% of your money to go get the 0.3% back. That's why it's important. You can always buy the stock back if it settles down and things start to work. So position sizing is where you start out with a pilot buy, and then if it works and you get up there with it a little bit and it's starting to look good, then you add to it and you do what we call pyramiding. Now, this picture here is a horse coming out of the barn. You know, back in the 70s, this makes me think of the 1970s. I'll say this, in the 1970s, and I started in the business in 76, you could not give a stock away. It was so bad. The market peaked in 66, dropped in half by 74, and then start to turn up again until about 75, 76. So when I say the horse is out the barn, what I mean is that we were looking at, looking back on it, what could you have done back in the 70s that would have really made a difference in your life, your financial life? You would have bought Walmart, and Walmart was a tiny company at the time. I mean, we were talking maybe just in Arkansas. It hadn't even spread to any of the other 50 states. So now Walmart is $600 billion in market cap, and so it's kind of like the horse is out of the barn. So when we look at a company and we say we want to double our money in this stock, we're just not going to go buy a $600 billion company. Realize that's bigger than Exxon. So positioning is important, and market capitalization is very important. Now, I put up here a graph of the Value Line Geometric Index. This is an index of 1,700 stocks. It pretty much is one of the better indexes to follow because it's equally weighted. It's geometric. So if you look back here in the last bull market, which was started around 2018, you can see what this index did. It really did well. Then we all peaked out right here in November of 21. And we came down in the bear market of 22. Now remember, 22 was bad. Everything went down. It's because the Fed went from 0% interest rates to 5% interest rates. So gold went down, stocks went down, bonds went down, real estate went down, everything went down in this particular year. It was a very rare year. So we've been consolidating ever since, which, if you're in the Magnificent Seven stocks, you're not experiencing this because the indexes, meaning the S&P 500 and the Nasdaq, are basically being driven by seven stocks. So it's very important that we start to see everything start to move. And so that's how you're going to see everything with a 1,700 stock index that's equally weighted. So you can see here that the geometric index hit its low here last year, and we're basically uptrending right now. And you can see we're breaking out of the box. So this again is, I'm just saying, and I could be wrong, it's just my personal opinion, I think we're starting to see a major change in the character of the market leaning towards smaller companies, basically. Now, if we want to see kind of an example of what we went through back during that period, if you remember with this particular indicator, we peaked here and so forth. Well, the main stock that we were in that was doing incredibly well was Tesla. So you can see here we got up. I mean, we started buying on this particular breakout right here. We were buying the stock around $40 a share, and we made 10 times our money when we got up here. We basically, exited the position, and the stock came all the way down from 400 down to about 100 during the bear market. And, now it's starting to stabilize. But my point is, it's now an $816 billion company, so the horse is out the barn. I think you have to move on to something else. You got to go look for the next one. I would feel lazy if I didn't do that. Now, this is another index. This is the RSP, which is the S&P equally weighted. Just note here, it's hitting new highs now after, really underperforming the other indexes for quite some time. So anyway, that's good news. Now, the other thing about the macro picture, which would be the economy, this is real personal income. And this is as of the latest data, and I just don't really see any problems there. I think the economy is fine. So hopefully we got us a bull market going here. Look at mortgage rates. Mortgage rates are actually plummeting. I hear the magic number for mortgage rates will be about 5.5%, and that'll start a refinance cycle. The other point I'm making is that the main trend is up. The primary trend is up. The S&P's primary trend is up. The Nasdaq, the primary trend is up. So what we were just going through here in the last couple of months has been somewhat of a correction. Now let's look at some breakouts and see what I'm trying to say about these breakouts starting to trend upward. This is GE Vernova. Interesting company. They spin off from General Electric. They've gotten into, they're into the windmills and the solar panels, but the other thing they're into is gas turbines, natural gas turbines, and they're also getting into small modular reactors, small nuclear reactors. This stock is acting very well. So you got your breakout. Actually, your breakout came right about here, and it's been trending upward very nicely. This is a change. This is a definite change. Now here's Guidewire Software. They basically do insurance software for the insurance industry. And you can see here you got the breakout, so you got what we call a gap up buy signal. Didn't really even pull back because, you see, we would have normally put our stop down here, but it didn't fail, and it's starting to trend upward. This is really good news, I just have to say. This is a company called Coherent. They're into lasers and fiber optics, and we know that with alternative energy or alternative intelligence, you're going to need a lot of electricity, and also you're going to need a lot of speed, and you can't get it with copper, so you have to do it with fiber optic. So you can see here we got a nice breakout here, didn't fail, and is continuing to move up. So there's another one. This is Carpenter Tech. This is also an interesting company. They make specialty steels, primarily for the aerospace industry. So, you look at Boeing, for example, which is, $200 billion, something like that. This is a $7 billion company. $8 billion company. What are the chances of it going to $14 billion, $15 billion, $16 billion? It happens all the time, statistically. Whereas if you take a company that says, take NVIDIA, that's now $3 trillion, what are the chances of it going to $6 trillion? Well, there's never been a $6 trillion company, so the statistics aren't there. The math doesn't work. So with Carpenter Tech, you've got a stabilization here, a nice base, and then a breakout starting to trend up. Here is Doximity, which is a software company for the medical industry, and they're the largest in the business. Very nice breakout, trending up. Looks good. Like I say, this is not what we've been seeing. Palantir, this is a company I really hope works out. They are into machine learning using artificial intelligence. Most of their business comes from the military. So it's a kind of a defense play, but they're also moving this into these. They provide an AI platform that corporations are starting to use. So all in all, what I'm trying to say is that we're seeing a change in character in the market, and it's good news. So let me know if you need anything. Thank you very much.